Hello and welcome to my class for understanding the basic concepts of accounting. आज हम क्लास में बात करेंगे what is accounting, what is the need of accounting, why do we need to know accounting, and what benefits the various stakeholders draw out of accounting. So all of us are well aware कि कोई भी business जब establish होता है तो ideally उसका purpose होता है to earn income or to earn profits, right? So how are we going to assess if the business has actually made a profit or it is into a loss? So the only thing is, when we get to know if the business is a profit making entity or it's a loss making entity, once we are aware of the sort of operations it is doing, and at the end of a time span, say it can be quarterly, it can be 6 monthly, or it can also be a half yearly or a yearly assessment. जब हम find out करते हैं कि business में expenditures ज़्यादा रहे हैं या business में income या revenue generation aspect ज़्यादा रहा है, right? So how do we do it? So the basic premise of noting down all the transactions in the business is done through accounting, right? So we get to know the results of the business operations with the help of proper accounting procedure. All the transactions, may it be the smallest one or the biggest one, needs to be recorded. And at the end of the tenure, maybe it's 6 monthly or even the yearly, we get to understand that what are the assets and what are the liabilities that the business holds on to date. So that is what is the premise of accounting, and that is why the accounting as a technique, as a tool, as a field of study has emerged. Right? So all these answers can only be known when all the transactions are very clearly recorded in the books of accounts. To know it better, let us understand the two definitions which are given. The first definition is by American Institute of Certified Public Accountants, which was given in year 1961. Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of the money, transactions, and events which are in part at least of a financial character, and interpreting the results thereof. So here categorically we understand few aspects of accounting. So accounting relates to the recording of the transaction, classifying the transaction, whether it belongs to an income transaction or it's an expenditure transaction. Does it accrue to this particular year or a year which has gone by or which is going to come in future? We also need to summarize the statements. All the transaction has to have a narrative with it so that we clearly know that this transaction happened on so and so date, and these are the debit aspects and these are the credit aspects of the transaction. Again, it has to be purely in the monetary or money terms. Anything which cannot be valued in terms of currency or money does not get a space in recording in the accounting transactions, right? And these transactions, whatever transactions are happening, should relate to the business or the organizational entity that we are referring to. So supposedly, if you have 2 to 3 business entities, each business entity's transaction should be recorded in its particular books of accounts and not in the others' books of accounts, right? So this is the basic definition which has been given by American Institute of Certified Public Accountants and which was given in year 1961. Apart from this, there's American Accounting Association, which coined another definition for accounting in year 1966. And according to this particular definition, Accounting is the process of identifying, measuring, communicating economic information to permit informed judgments and decisions by the users of accounting. So here we are again referring to the same terminologies which were given by the earlier definition. Here we identify the transaction, it has to pertain to our business, it has to be again monetary, something that can be measured or has a value to it, and it should be communicated to the respective stakeholders. See, I mean, in a business there can be n number of stakeholders, the primarily being the owners or the promoters of the business. Apart from that, you have people who have invested from outside. It can be a bank, it can be a financial institution who has invested or given in money to the business to run its operations. Apart from that, there can be even bond holders. You can have debenture holders who've given in their share in the borrowed capital for the business entity. Hence, they are also quite interested to know how the business is performing, because ultimately they will only be repaid out of the profits that the business is going to earn. There can be other stakeholders which are little external, as in like the government, the society, the customers, the employees again are the internal stakeholders within the organization. So all of us want to know how the business overall is doing, whether it's a profit making entity, it's a loss making entity. So it's basically account records the transactions, classifies the transactions, summarize the recordings, and then give out this information to the relevant stakeholders, and this information can become the basis of decision making on the stakeholders' part. So it has a lot of economic value as well that is there in the accounts.